Everyone, welcome back to another class. So this is an ongoing series for NPSC and NSSB, and aji key topic azulado national income. This is an economics class, and this video is an ongoing series of economics, which will be very helpful for your NPSC as well as NSSB preparation. Before I start my class, I like to announce that there's a mock test for combined technical online mock test. If you're interested, you can check it out and you can register in the mock test. And last time also I've conducted the mock test, so you can check it out the question paper, the demo question paper from here. So let us start with the class, that is national income. So economics, though it is a very vast topic and also very difficult to understand. So with MCQ it will be easy to learn. MCQ based question it will be very easy to understand. Also I'll be explaining each and every topic with the MCQ, so the interactive session is next. So let us start with the class. First question: GDP is the total value of Dutch during a specific period. So last class, if you have attended, you might have come across the GDP. GDP stands for as a gross domestic product. So gross domestic product. So the word by ki domestic. Domestic means एक country they produce करला. तो इतो GNB को ना भी होनी ना तो gross national product. So gross domestic product, though the total value of goods and services produced in the country within a financial year is called gross domestic product. That means my ini nagamis pagkakita suppose India ito mo beautiful India. So ito India de mon kiman income generate करे through business or transaction or ki कोई income or that is government projects, private projects ki paisa kiman generate करे market in the financial market, security market, kiman bonds, shares, loans, debentures ki paisa kiman generate करे itu within the territory of India. For example, ini kubi ki 25,000 crore ekta saal de mon earn करे in a financial year within the country. So itu alag US company income alag nahi India de locally means ki income generate करे itu sob calculate करे itu ki gross domestic product made. So the option is all of the goods and services produced. So itu correct aja, but tan ekta specific period ko na do. Next, all the finished goods and services produced within a country. This is also possible. All intermediate goods produced in a country. This is not true because intermediate means ada there. Both intermediate and final goods produced within a country, it will know because gross domestic product it accounts for only the finished product. For example, to ekta car banai, you are making a car. For example, ki Brezza koi car do there. So suppose to you need iron, aluminium, what materials, zinc, like that, and phosphorus, what we need. So itu materials to itu iron kanda unfinished good as well. Unfinished means itu angge purify korna, itu angge chapta korna kare banawala aja. So itu unfinished product iron, aluminium itu angge intermediate goods koi, means itu mon itu convert korna kare banawala aja. So if mon itu aluminium doi count korsikule it will account for double counting because itu iron, aluminium na worth to, for example, ini koi 5,000 crores itu la value do. It is the Brezza industry la worth to rupees koi to 20,000 crore. So we know that iron is finally going to be converted into car. So instead of double counting, mon itu last day final goods kiman ki hoy itu ke calculate kore so as to account for so as to prevent this double counting. Double counting means ekta sabanda or duibar count gorala idu nohol. So the most definite answer will be all the finished goods and services produced within a country, finished goods. So the answer is number B. So gross domestic product, total monetary or consumer value of all the finished product, goods and services produced within the boundaries of a country within a particular period of time, means X साल is called the gross domestic product. Usually 1 year is one financial year. GDP offers a country's economic snapshot used to measure the size of an economy and pace of the growth. GDP can be measured using expenditure, production, or income in 3 ways. So next, number 2. Neutral, expansionary, and contractionary strategies are related to which policy of the government? So neutral, expansionary, and contractionary strategies. It is means idu ke jukle do one suppose kiba ekta policy ekta nije. So whether we need to follow a neutral means equal action nolole expansion korle, because expansion means kiba ekta include korne itu dangor banole, and contradictory itu kichu tu banole. In the sense like, for example, let us take an example of tax. The tax government has the tax. So suppose in neutral means tax to neither increase nor decrease ko neutral do there in one case. Second case to case the tax to expansionary means increase ko tax to, because why we need to increase the tax? Suppose there's an inflation India the inflation means paisa la value uthia. That means the job of the government is to absorb all the excess money from the market. Paisa to itu paisa kiman ase market itu sob to taniol la itu kina taniol la directly manuange mangyo na bro. Instead we increase the tax. So itu ke expansionary ko. Number 3 to kidia one inflation in it la opposite to depression or deflation, or inga time de one paisa la supply to kom dija. So this shows that the market needs more money, paisa lage market. So we will decrease the tax to decrease kuchikli to manu la hati paisa bishi da go. For example, tuila income the rupees 50,000 ase there are to neutral ase. That means you neither have to pay any taxes inga na, and you next to case to taxes increase. That means for example to 50,000 earn kora udate tuila tax to 10% increase 20% increase kora. So it will be 10,000 inga. So tax to increase korna tuila ita to income tax to 5,000 ba asol to 5% aja tuila 10% korna katisha. Next to tax to decrease. That means 50,000 income by so udate tuila tax to 5% banana 1% namaja. So you have to pay only 500 rupees. So it means that tuila hati paisa dago. So this expansionary or contradictory policies of the government idu anki ki koy. So government it is related to the fiscal policy of the government. Monetary policy it is related to Reserve Bank of India, which includes the cash reserve ratio, statutory liquid ratio, open market operations, marginal standing facility. So these are some of the monetary policies of the RBI. Fiscal policy though totally related to the government, especially the finance ministry. Finance ministers are as a whole the government is responsible for the fiscal policy. So let us study about the fiscal policy. That is, the fiscal policy refers to the use of government spending and tax policies to influence the economic condition. Fiscal policy is largely based on the ideas from John Maynard Keynes, who argued that governments could stabilize the business cycle and regulate the economic output. During a recession, the government may employ expansionary fiscal policy by lowering the tax rate to increase the aggregate demand and fuel economic growth. When inflation mounts, the government may pursue a contractionary fiscal policy. So these are the answer. Next, number 3, the personal income. minus personal tax payment minus non-tax payment to kids. So personal income, for example, tela personal income to rupees 50,000 as a koi. Ota there minus personal tax minus koi 10% tax. That means 10% of 50,000 ki man as a tax katili should 1 2 1 2. That means 5,000 rupees. Just I'm using an example. So 10% of tela personal income. So 50,000 as a minus personal income to 5,000. Itu 10% tax as that. Minus non-tax payment. For example, ki GIS, medical allowance, aro ki kan disposable income kan. Suppose ini kubi ki it is 1,000 rupees. So itu minus ki man ho. So 50 minus 45 mana. That means tila hati de no 44,000 hati as in hand. Itu tax concept kata bijde. So this hati takala income do itu ki koi personal disposable income. So personal disposable income definition because it is a net money available with a household that can be saved and spent as a tila hati utu 44,000 rupees takala itu personal disposable income boy. And this is calculated by PTI. So ki as a personal income minus personal tax minus non-tax payment. Alak saishikule national income. Alak option saishikule national income is the total value of goods and services produced in the country. Gross national product to GDP minus depreciation. GDP plus income from abroad. Abroad pa means US pa paisa aishikule it is calculated as GNP. Next question. The value of national income is adjusted for inflation is known as KIS. So usually GDP to mon national income nishna sai. That is GDP. So we consider this as national income. National income. GDP ti ke jikle to India de kiman paisa earn korise it within the boundaries of India it is known as GDP. Aro itu ke mon equate kore national income ke. To kitia mon inflation ke adjust karo. Sabe suppose mon national income to rupees could be 20,000 crores. There, this is the real one national income means national income calculate kore iman aise. So we know that inflation be ase to India na. That is every country has inflation. Inflation na thakile no one market to survive korno bro. Too much inflation is also bad and less inflation also is bad for the market. So inflation to mona India 4% jaise out of this income. Mona inflation to 4% ingate jaise. Alla country when the economic condition of a country is biya ho jaye. For example, now we are experiencing high inflation in United States because of COVID-19 in pandemic, and also in Europe because of that is Russia-Ukraine war gonna be Europe inflation experience cause. That is around 2006 2004 to 6 falibe ekta inflation raise that is the Zimbabwe de. So Zimbabwe de itu story dike jugule to Zimbabwe de auto president Robert Mugabe connected dekje Robert Mugabe. So Robert Mugabe ba tai ba paisa bishi print korje in such a way that inflation though it became more than 1000% inflation. So there was reports that currency though it one highest currency kiman as India de just it is 2000 be hata di money though 500 as India de highest currency Hollywood though rupees 1 billion currency with 1 billion currency. So this cost inflation in Zimbabwe. So inflation do India de 4% has. So 4% of money do 4% of 20,000 crore is there. Udo 20,000 by minus crore. That is, it will come around rupees 18,000 is na crore. Just a rough figure. Minus 4%. So the national income na itu national income minus inflation itu minus krona ki olai. So it is also known as real national income. In economic terms, GDP of a country is regarded as the national income. Also, GDP is adjusted for inflation. That is called real GDP. That is the real national income. The real national income is adjusted for inflation, calculated from a reference point, which is a base year. Adjustment for inflation eliminates the rise in GDP value due to rise in rise in price of goods and not overall production. Base year to 2011 and 12 has. So itu ki karne measure kore kushi bole to, for example, just say 2011 or 12 the inflation do 4% rakhe na itu 2011 of the inflation 4% is utate rice la dam do rupees 10 per kg is there. Or just say we are living in 2024 to 25 financial year there. So ita to rice to minimum it is rupees 30 per kg is. So if we calculate at the rate of 10 per kg in a GDP calculate it will come around 10,000 crore. Mona value do because rice la value to rupees 30 so it will increase to rupees 20,000 crore in a market la value do. So it shows that it will 10,000 or 20,000 value uthes. So this will not be good because it will not show the real growth of a country. So at the best reference here rakemon to calculate from there, and from there we will calculate the real inflation rate. So it will minus crucial we get the real condition of the market in India. Just because 2011 of the price competition doesn't mean it will be. We need to measure the inflation through this. Next, number 5, the difference between the national and domestic income is that of we know that GDP though within a country is GNP though GDP plus abroad baala income though na. So the difference between gross national product and gross domestic product is what? It is the net factor from abroad. It was domestic income. It is a sum total of income generated by all production units located within the domestic territory of a country during an accounting year. National income though sum factor of all the factor income earned by the normal residents during an accounting year. Our difference though, they simply put the income generated by residents and non-residents foreigners into though it accounts for the GNP, that is gross national product. So the answer is net factor from above. Next question, number 6. Which of the following is not a feature of national income? So national income the feature to key is that is it is a macroeconomic concept. Macroeconomic means a large term deal. That is, we take an account national income to rupees 20,000 crore. Like the whole country lamon economic strength, economic paisa te kiman generate krise ekta country te sob in macro level there. One study kore do macro level there. So 1 is correct. It is a flow concept. It is ekta flow concept bhi ase. That is next though, it is also expressed in reference to financial year. Financial year in the sense like 2001 financial year 2022 to 23 loe. Financial year 2024 to 25 as a financial year. So we take a baseline, a limit of 1 year, that is from 1st of April to 31st of March every year country. So 1, 2, 3 to correct as. It is included only in intermediate goods. I have said that national income, that is gross domestic product to mon intermediate goods denoted. We only account for final goods, final day July, not intermediate. So the answer will be how much? The answer will be what? It will be B. That is, it is included only in intermediate products. So option 1, 2, 3 the correct answer. Option D is the correct answer. So let us study about this. The following are the main categories of the national income. Macroeconomic concepts include national income. Taking into account the monetary value of goods and services is national income. An extended period of time is used to measure the national income. Means at the time frame de 2022 to 23. Consideration for national income include the net total values of goods and services. The net national income solely takes into account the value of final goods to prevent double counting. One intermediate question because double counting ho for car manufacturing one loha iron gun measure no last car de kiman generate kre uto by one account de not the iron aluminium or the zinc platinum no only the finished product there. When calculating national income, the value of intermediate goods is not taken into account, correct? Net factor of income is included in national income also. So next question. The method in which the CSO takes into account the national income is that is production method, income method, expenditure method, or a combination of all the three. So Central Statistical Organization ko naita national income measure kore idu ba kuntu method chula national income measure kore. So we use a combination of all the three, that is production, income, and expenditure. Itu tinta method. So let us study with this. National income is the total value of the value of production in a country's economy during a year. The national income of a country can be measured by three methods, that is production, product method, income method, and expenditure method. So the answer is a combination of all the three. Number 8. Gross primary deficit is the difference between KZ. So gross, first of all, there are many types of deficit. Revenue deficit, revenue deficit ase, or fiscal deficit ase, or primary deficit ase, inga primary deficit ase. So the question is gross domestic deficit, gross primary deficit ke ase kule to it is the difference between the current year's financial deficit and interest payment made on the previous year borrowing. That is, for example, ini kowe ke for example India de I'm making this as simple as possible. India de won this year 2022 to 23 la data jauda. For example, one income one kiki income ase do kiman ase, that is we refer to as receipt. So idu income ke mon receipt pimade means paisa kan ala. So rupees kubi ki 20,000 as a crore there. Aro expenditure one expenditure there rupees 23,000 crores. So expenditure do income lo de pishi ja, that means mon kiman ahe je itu lot bishi bola man phelai ja. So if we take into account this, that means 23,000 crore mon expenditure kore ja minus 20,000 mon kamai ja, that means we are falling a shortage of rupees 3,000 crore. Idike koi idike deficit made that is 3,000 crore do nabungje. So because of this, itu 3,000 crore do we need to bridge the gap. Itu chenda do bon gurle do mon ki kure to mon disinvestment kure ar mon itu government shares bigri kure mon loan le alak bank kamba alak financial institution like Asian Development Bank, World Bank, IMF gamba mon paisa lina do 3,000 rupees to 3,000 crore do mon itu bridge itu chenda do bon gurle thai kure idike deficit mane. So itu deficit ke alak deficit ase. First to revenue deficit. Revenue deficit ke jogule to kitia mon la revenue to ba bishi expenditure idike revenue deficit kore. And next to primary deficit, fiscal deficit. So fiscal deficit ke jogule to total ita measure krishna in a financial year age de revenue to kali mon revenue ala is only fiscal deficit to overall, that means total expenditure minus income gives us the fiscal deficit. It was so fiscal deficit though we have already understood this. So next ekta ayo gross ita to primary deficit. Primary deficit ke jogule to primary deficit to mon fiscal deficit paisilo mon already fiscal deficit to total minus itu total expenditure minus total revenue ase fiscal deficit to primary deficit to fiscal deficit minus interest payment ase, means mon ki koy bank kande interest jama korna ase to mon itu loan loala, so itu ke tera wala, so interest payment itu minus korishile to mon asli primary deficit to ola jaw. So gross primary deficit ke jogule to it will be gross fiscal deficit na minus net interest liabilities, means net interest means itu interest jama korala liability. So I hope you have understood this. Gross primary deficit refers to the difference between the current financial fiscal deficit to mon total expenditure minus total total receipt. It was minus interest payment made on previous year borrowing, means 2000 ita to mon 2022-23 la mon loisa holibe 2021 de mon dhar loala idula interest to mon tiraisa. So the answer is this one. I hope you got this. I've explained this and as much as simple as possible. So let us study the two deficit. Revenue deficit to it is the overall revenue received and budget expenses. It was a fiscal deficit to that is government estimated borrowing is reflected in the fiscal deficit, and it is fiscal deficit is equal to total expenditure minus total revenue or receipt in economic terms. It was so revenue to kali revenue ki mon focus is only fiscal to overall as aro next to primary deficit to mon itu fiscal deficit to lower fiscal deficit minus interest net interest payment on loans. So these are the three types of deficit. So with this the national income has been completed. I hope you all have understood something, and if you are interested in the mock test, the link is provided in the description. You can check it out for more information. Thank you guys for watching, and I wish you all the best for exam. May God bless you all. Thank you.